home. So this is just the start of that valuation setting exercise which Brigade is undertaking.
Okay, all right, got it. Thank you very much for that, Sonal. We are counting down to the open, and the start is going to be almost 50 points higher. So we're right in the center of that range, and this is where we spent the last 4 trading sessions now, between 25,500, 550 to going up to about 25,600. So let's see how it plays out. Yesterday, the Bank Nifty played spoil sport. Let's see if it can be any different this time around. So just waiting for the countdown and the opening bell to go off, and here we go. All right, so we have a 42-point gain, 50, now 60-point gain on the index. And leading it from the front would be some names like Power Grid, Tata Motors, Shriram Finance, Wipro, Infosys. So these are the early movers. On the downside, some of the banks are still dragging. Some of the financials are still dragging, which was the issue with the market yesterday. So names like HDFC Life, SBI Life, lower this morning. Kotak, down over 1%. IndusInd Bank is still down. Yesterday, it was reacting to a downgrade coming in from a brokerage note. So these are stocks which are still on the lower side. Nifty is just about trying to digest that gain of 40 to 50 odd points. Let's see. Bank Nifty is absolutely flat, but mid-caps off to a better start this morning.
Okay, let's quickly run through the large cap action then. In the Nifty, the top gainer today is Power Grid. Asian Paints too is shrugging off news about that CCI probe. Yesterday also it recovered nearly 3% from the day's low to close higher by 1%. It's added on another 1%. Eternal is up. Moving with strength are a couple of these commodity names, metal names, Tata Steel, Hindalco on the buyers list. IT heavyweights like Infosys, Wipro seeing buying. The gains are up about 0.5 to 1%, but in the green now for even a Power Grid, Shriram Finance, L&T. These are some of the stocks holding up in the green. On the way down, you've got Kotak Mahindra Bank hit, IndusInd Bank, where there is a Macquarie double downgrade. So after Goldman's downgrade yesterday, there is another negative brokerage news, and the stock is open with a cut of about 0.5%. Bajaj Finance has lost 3% of its market cap this week. Reliance Industries is retracing. In the morning, there was news about, in one of the pink papers, about how the company is looking to consolidate all the FMCG business into one entity so it can get the investor interest and the management interest focused and targeted. Reliance Industries, a little bit of a profit booking. But other than that, it's mildly positive now for the benchmark indices. Outside of that, it's Nykaa Avenue Supermarts, Nigel, which are under pressure.
Well, that's right. Nykaa, that large trade has taken place, which is up for you on the screen. 6 crore shares getting, changing hands out there. So that's out of the way. Let's see what the stock does. 204 or thereabouts. Let's see if there's a recovery inside. Avenue Supermarts, that's taking on the chin. But the other smaller players, V2 Retail, that's up 3%. Bazaar Style Retail, that as well is up close to around 2%. So contrasting reactions is what you're seeing on that one. V2 Retail still up close to around 3.5% in trade. Vedanta, actually, it's a good day for them to come up with that NCLT deferment to August, because global cues are fairly okay. The street is a little bit optimistic on metals. So the stock is down only around 0.5% or thereabouts. There is value. However, that demerger timeline could get stretched a little bit. For the time being, stock down only around 0.5%. PB Fintech, there's that upgrade that's come about. So that stock's up close to around 2%. Mahindra Financial with that as well is reacting favorably. Bharat Dynamics, that's the one actually that's pulling back today. That's down close to around 2%. Remember, some of these defense names have seen a big run. But, now, in fact, that one has come in for some mild profit taking as we speak. But the market's up 60 points. Let's see whether or not we have enough to go to around 25,600 or thereabouts. Today, remember, US markets will be shut early, and tomorrow they are on holiday. So the bulls will be going according to their own steam.
One thing that's quite evident in the market action is the propensity to start moving towards consumer stocks. And we keep seeing instances of that day in and day out. Look at the stocks on the move today as well. Rima, of course, highlighted Asian Paints. There's accumulation that started. Now, whether this continues and becomes a lasting trend or not, we'll have to see. There's Eternal, which is doing pretty well. And there are names like Tata Consumer as well on the upside. So interesting move coming in, 63 points higher on the
on Asian Paints, Abneesh had earlier written, we had spoken to him, but he had written it will be difficult to prove the CCI probe into Asian Paints abusing its dominant position. Many times, disgruntled distributors initially complain, but eventually they retract. This is very similar to the JSW complaint about 6 years back, but eventually CCI dismissed the complaint, saying that there was no conclusive evidence.
Yeah. So maybe not as damaging. I mean,
not as damaging, and perhaps the CCI could dismiss it. At least that was Abnish's, one way of thinking about it, which is reflecting in the way the stock moved yesterday also.
Absolutely.
And even today now, 1.5%.
It's also a lot about where you are in the market at what point in time. Now, if Asian Paints was coming off, after a strong 1 year, 2 year rally, then maybe the market reaction on the news of a CCI probe would have been very, very different. But we're in a very different space when it comes to the paints sector. But let's discuss this and more with our next guest. Vineet Samre, Head of Equities at DSP Mutual Fund, is joining in. Vineet, great to have you on. Thanks so much for being with us. We were just discussing amongst ourselves because we look at so many views coming in from the sell side, and it's almost like a perfectly balanced market between the bull camp and the bear camp. CLSA, and we were just highlighting this. We spoke to, Vikash Jain of CLSA, just earlier. And they're obviously very cautious. They're going with the narrative that earnings are not really picking up and the market's expensive. On the other hand, we just spoke to UBS, Hartmut Issel, their Asia equity strategist, and he says, hey, earnings will pick up. You've got a low base. You'll have double-digit earnings. There's a fiscal boost coming in as well in the form of the income tax cut. So why wouldn't I buy India? He's more optimistic and constructive of the market. Which of these views is more palatable to you?
So clearly, as long-term investors, I think the second view is more palatable. But let me say that I think at the moment, both the views are somewhere, I would say, balanced. And I think it is a time frame with which each of them are sort of looking at the situation at the moment. And clearly, as we have recovered from the market lows, which we had seen in the month of March to now, valuations have seen, it seems to be a bit punchy across the board, not just a few sectors, but across the board. And on top of it, we are entering the first quarter with a slightly moderate kind of an expectation. Demand momentum has still not maybe caught up, to the expectations. And we believe that all the factors, the macro factors which are required, like you mentioned about the taxation, interest rates, and all of those, I think definitely those will have a positive effect on the growth, on the economy. But maybe it takes 2 quarters or 3 quarters down the line, maybe through the festival season, we start seeing some improvement. But I think from my perspective, I would say that the macro factors are now more conducive for growth versus last year. And all of these factors should eventually mean that, and with the low base of last year, maybe this quarter, next quarter, we still have a slightly lower growth. So from that perspective, I would say that the growth outlook should start improving maybe towards the second half, and that's where one should start looking at some directions for the market.
So how has this, Vineet, morning influenced your portfolio decision making, say in the last 1 month? Can you tell us what you all have been doing at DSP Mutual Fund?
Yeah, so see, broadly, I think the portfolios really doesn't change as much really from the very short-term perspective. But broadly, what we are trying to align our portfolio towards is these macro factors which are going to mean that the balance of trade could shift to consumers as a category towards the maybe end of this year. The banking and the lending space could start again becoming good because we have actually reached a stage where the credit growth is lower than the nominal growth of the economy. So that's something which is alarming, and that could sort of start becoming better as we go forward. And incrementally, I think there are some sectors where we believe they have been in the low cycle over the last 2 to 3 years. Including, the rural side of the economy, the agri input as a category, the specialty chemicals. All of those are something where we are seeing some bit of recovery trends coming about, while it still remains very volatile globally. But we believe that after having seen a consolidation over the last 2 to 3 years, these segments could also maybe provide a decent opportunity again from the next 2 to 3 years perspective.
Hi, Vineet. Good morning. Good to see you, Vin. What about allocation? There was a time, I think around 4 to 5 months ago, where those small and mid caps had gone through the roof. Then they went through a cooling off period, actually, which would have been a great time to enter. And if I remember correctly, somewhere in the month of March, you were saying that maybe it's a good time actually to allocate to some small caps at this point of time, small and mid caps. Post the recent run-up, some stocks have bounced up 30-40% as well. What would your capital allocation strategy be?
No, so I would, Nigel, I'm very biased towards the small and mid cap, having
Yeah.
seen the segment for long now. I believe that, generally there are broader opportunities which one is able to play through these categories. And one has to really take a long-term view because we have seen many companies. In fact, let me give an example that 5 years back, there was no EMS as a category in India. And look at the market capitalization of the largest company out there. So I would say opportunities are also sort of coming up. One needs to keep a much more diversified view and also a long-term view around these categories. And hence, I would say that having a decent size allocation, if one is thinking of next 7-10 years, towards a small and mid cap is not an issue at all. Short-term movements are very difficult to capture and forecast, and hence I think one should clearly take a longer term view around these.
Vineet, let me quiz you a little more on the consumer call, because that's also becoming, I mean, not a really consensus call in the market, but increasingly people are veering around to the view that at some point consumer stocks have to perk up. Which segment are you relatively more optimistic on? I mean, while discretionary consumption anyways, when we were discussing this actually on the editor's playbook yesterday, and that show will play out soon enough on CNBC Access. But discretionary consumption in stocks like Indian hotels, etc., they've already gone through the roof. But more mass consumption, do you expect that pick up? And how would you play it? Retail, apparel, FMCG, I don't know, coolers, ACs, how would you play it?
No, so I think you're right. And very frankly, it is a bit confusing because very difficult currently to understand the demand trends. While we broadly know that consumption as a category should do well given what's happening. But like you said, I think it is going to be a bit tentative because as we look at different categories, the quarterly numbers or the commentaries are not very clear in terms of how the trends are going to sort of sustain going forward. So maybe it would be a good way to create a basket of categories, a basket of companies within subcategories, maybe a white good as a category, apparels, innerwear, QSR, some of these, and take a broader call that if we broadly are with companies which are sort of leading companies within those spaces and likely to be beneficiary of the macro trends, I think we need to take them as a basket approach, and which is what we have also done as a part of our portfolios. And especially if you look at a small cap fund, I think we have even more broader segments to sort of look at. And from the other perspective, I think we're also thinking that the mass consumption, which you mentioned, I think the low income category definitely, which was hurt a couple of years back. Now, I think we are seeing them also maybe going to participate in this consumption trend. So that's one area. The other, other which is from the macro front, we have a bit of a contra trend, which is the auto ancillary today, where we are seeing the growth for the OEs bit low. But I am generally positive on the auto ancillary front because I think these companies have created very strong franchisee and they are able to capture the global markets and capture even wider areas beyond auto, let's say aerospace, defense, and all of those. So I would imagine that it is also going to be good to have allocation towards those categories because the companies there have created very strong, franchisees for the products which they are into.
Okay, so advisable to take more of a basket approach, basically, because you don't know where the wallet will open and where the money will be spent, whether it's shoes or apparel, like you said. So maybe better to take an overall approach to these things. What else, Vineet? I mean, where else are you optimistic looking at the second half of this year? You mentioned financial services. Again, that's a very wide universe. So there, as we go through this rate cut cycle, I mean, where are you more optimistic? Banks, non-banks, maybe some of the side plays like maybe insurance, capital markets, etc. What do you like here?
So I would say that in the order of, let's say, preference, I would first go for the non-banking financial companies because there the benefit of cost of funds will flow through maybe 2 quarters down the line, and they will see much better growth prospects. Again, the low base should sort of help these segments. Beyond that, I would also say that the life insurance companies, while they have moved up and the valuations particularly are not very attractive, but still, I would imagine that the sector is coming out of a very strong regulatory headwind over the course of last 1.5 year, and maybe and despite those headwinds, I think the sector has performed quite decent in terms of their overall performance. So having a positive view around those as well. And capital markets, actually, it's very cyclical. Maybe next 1 or 2 quarters, if we have more market volatility and some of these names become slightly more palatable in terms of valuations, we are open to look at those as well.
Vinny, thank you very much for joining us this morning. Moving on now to the consumer durable space. Now, channel checks suggest that weak sales and demand for room air conditioners amid the early monsoon and weak summer has hurt sentiment, especially compared to last year. So we have with us B. Tyagarajan, Managing Director at Blue Star, with us on the show. Thank you very much, sir, for joining in. Would it be fair to say that Q1, the room air conditioning market, RAC, could see a drop of 20-25% given the monsoons that we've seen, the fact that summer demand, consumer sentiment has been weak? Is a 20-25% decline for the industry or for your company a realistic assumption?
Good morning, Rima. Wonderful to talk to you this morning. This has been in the news for quite some time. From April onwards, there has been a monsoon and the temperatures did not go up at all. It's a weak summer. So prior to the end of the quarter itself, the industry has declared the degrowth over last year would be around 25%. Remember, last year was a bumper summer. It was more than 57% growth. Now that has been in the news, so nothing is going to change now. It's a quarter which was bad for room air conditioners, may not be that bad for commercial refrigeration products. Having said that, to take a CAGR, still it is holding up at 15% CAGR, and even after this weak summer. So if you are part of this industry, one will have to cope with these unfortunate seasons. That's perfectly fine.
So you're saying a 35% drop for the industry in Q1 for room air conditioners? Did I get that right?
My estimate is the industry should have grown by around 25%. Blue Star also, I have been stating this for the past 2-3 months that it is so. And I have also stated one more thing. Whenever the summer season is weak, the festival season and the subsequent Q4 always have done well. And, I have plotted all the weak summers in the past. Eventually, some 10 to 15% growth is really possible. It should happen.
Okay, so 25% lower for Q1, but for the full year, 10 to 15% should stay intact.
Yeah, I am maintaining that this has been...
You're maintaining your full year guidance. Got that.
Yeah.
Okay. Sir, so, the other issue was this whole compressor issue. That was something that was hurting the industry till a couple of months back. That has resolved itself completely now?
I would say provisionally, because there was an extension that was given. This is a non-tariff barrier. So let us get the big picture right. There is a PLI, component ecosystem is coming up, and for compressors, the facilities are coming up. And I think by 2028, India should be self-reliant on compressors. In the meanwhile, the extensions are being given. It's sometimes 6 months, sometime 1 year. So at least at this point of time, there is respite still around June 2026, and industry will have to work together to ensure that we become self-reliant. I think by 2028 it should happen.
Hi, sir. Good morning. Good to see you, Ben. You're sounding optimistic about the next few months, though the start to the year has been quite soft. You had pushed through a price increase in line with what the industry as well had done. What is the trend in terms of pricing from here on?
See, whenever the summer season is weak, so one would like to clear out the stock. Stocks are not at abnormal levels, but one will have to clear out the stock. And remember, there is going to be an energy label change that's coming up on 31st December 2025. And so there will be huge sale of old energy label products. And moving into 2026, there will be demand for new energy label products. The consumers will behave both way. Someone would like to buy today's 5-star. Somebody would like to buy tomorrow's 5-star. So the festival season is going to be exciting. At this point of time, I don't think there is a huge price drop that is happening. But I can imagine whenever there is a weak summer, you will not have opportunity to improve the margins. I don't think so. So next 3 years, Nigel, we talked about it. It's like the Duckworth-Lewis method. So you don't know really whether to score runs or hold on to the wickets, and that's how it is. We will do so.
It's been actually a good start to the test match. I hope so, that our boys can pull it through. We put up more than 300 runs on day one, and it seems, hopefully we'll have this covered. That said, getting back to business, your market share has been gradually improving, and you've outgrown the industry. Could you give us the targets for the next few years, Mr. Tyagarajan? Where do you see your market share headed?
No, as we have declared that our immediate goal is 15%. We were somewhere near 14%. And that is something which we could not do it last year. I think we will persist with that. The strategy behind that will be to have products at all price points and to differentiate ourselves through exceptional customer experience. The consumer expectations are also changing. They are used to now quick commerce. So they would like the air conditioner to be delivered the same day, installed the same day. The service level expectations are going up. So we continue to invest in these areas so that we are a differentiated player and we have the products at all price points and continue to expand the distribution network. I think we will be able to get to 15% or closer to 15% at least by end of this financial year.
Sir, considering that Q1 has been a bit of a washout, what will this do to your margins? I think you're guided for about 8.5% in terms of EBITDA margins. Will you be able to manage that in Q1? And for the full year, what are the raw material trends that you expect?
Our policy has been clear that if there is a raw material price increase or input cost, we'll pass it on to the consumers. We will roll it back if it is coming down. I do not see a major problem in margin management rest of the quarter. The Q1, of course, was always known that you are planning for 25-30%. When that didn't happen, right from April, May, we have been declaring that this quarter will be a quarter which is disappointing. I won't call it washout. The degrowth is compared with the previous year, which was a bumper year. So if you are to be taking average of the 2 previous years, still it would have been a flat growth. So there is nothing to worry about that. So it is just that your expectations were high based on the IMD forecast. Therefore, one is disappointed. That's about all. So the industry has been playing responsibly, is my view. And let's say, what are we talking about? We are talking about 8 to 8.5% operating margin on a full year basis, whether this category can deliver. I continue to maintain that it will be possible.
Just a quick word on commercial AC, CAC as you call it. What's been the growth in Q1? Because data center demand is really fueling, growth in this category for you. So what is your revenue contribution from commercial ACs? What is it growing at? And give us some projections, say in the next 2 or 3 years, what could that number look like?
I will not be able to talk specifically about Q1 because we are on a silent period that till the results are declared. But commercial refrigeration has the potential to become another room air conditioner category for the simple reason the penetrations are very, very poor. The growth projections are at a CAGR of around 25%. And Blue Star is a leader. We are present in every part of this segment, whether it is deep freezers or bottle coolers or cold chain, and we are not present only in the transport refrigeration part of it. But unfortunately, the market size is very small. It is less than 5,000 crores, and I would expect this to triple by 2030.
Yeah.
And
Yeah.
driven by consumption of frozen food. Right now, the growth is driven by also the quick commerce delivery platforms. A lot of
Right.
cold storages are set up by them, and
Yeah.
the pharmaceutical industry is expanding. And most importantly, the traditional retail, or what we call as Kirana stores, they are modernizing.
Correct.
It's an exciting part of business for us.
Sure. So commercial refrigeration, that's a segment to watch. Sir, very quickly before we let you go today, could you just tell us, with Q1 being as lackluster as it was, what are your inventory levels now? How do they compare with average inventory levels? And also, roughly speaking, what is the utilization rate at which your plants would be operating?
No, again, much before the end of the quarter, I have disclosed this to you and the financial press. The productions were cut down by 25 to 30%, depending on the SKUs. And because manufacturing is happening locally, I do not think finished goods inventory is an issue at all. One will have to look at the dealer inventory, whether they all, if you recollect, in March, they purchased for the rest of the quarter, and they are also diluting it. And I don't think inventory is a major issue. Perhaps, 2 to 3 weeks more inventory maybe in the system, that is perfectly fine. And the good thing that has happened is with the local manufacturing, you do not have this issue. Earlier, prior to 2021, containers of air conditioners would have reached India, and you will struggle for 6 months till the onset of festival season to liquidate. That's not the case anymore in the industry.
And sir, the capacity utilization at present?
Going forward, forget Q1. Going forward, it will be on an annualized basis. We are running tight. We will be close to around 100% because our expansions are happening modular depending on the demand.
Okay. All right. Got that. Good to know, and lots of details over there. Thank you, as always, for joining in and giving us some perspective on how things are shaping up now that Q1 is over. That's Blue Star talking about things picking up in the second half and retaining their guidance of about 15% growth this year. Let's move on then to a CNBC-TV18 exclusive. Karnataka Bank saw a leadership shake-up after its MD and CEO Sri Krishna Harihara Sarma resigned, citing personal reasons. The company's executive director, Sekhar Rao, also resigned, citing personal reasons and the inability to relocate to Mangaluru. In an exclusive conversation with Lata Venkatesh, P. Pradeep Kumar, the chairman of Karnataka Bank, spoke about the interim arrangement and the impact of these leadership changes on the bank's business. Take a look.
Yes, both the MD and ED have resigned. Mr. Raghavendra Bhatt was an ex-CGM of the bank, is a retired CGM of the bank. We have just inducted him as a COO. We have recommended an interim MD to the Reserve Bank of India. We are awaiting Reserve Bank of India's approval for the new interim MD.
Okay, fair enough.
And we trust that the Reserve Bank's approval for the interim MD will be in place before the 15th July when Mr. Sri Krishnan will be resigning.
Okay, fair enough. What is the more longer-term plan? Have you all already started a search for a new MD? And is it, some organization, an HR company, or is it an advertisement? What is the procedure?
We have already constituted a search committee on the same day when the resignation was accepted in the board. They are in the process of appointing an HR firm. Okay. And maybe in the next 1 week, we'll appoint the HR firm and then go forward with the selection of the new incumbents.
Okay. By when do you think the entire process will be completed?
I mean, it's very difficult to estimate. Maybe 2 months for month and two for selection, another couple of months from RBI for approval, maybe 3 to 4 months.
Okay, okay. Did Mr. Raghavendra Bhatt retire recently?
No,
is he familiar with the bank? Is it just like a very
He retired in 2019. He's very familiar because he was with 38 years with the bank.
Okay.
He knows the bank inside out, including the people.
Okay.
That's a great advantage. That is why we thought is the right choice to bring in as a chief operating officer so that the operations don't suffer.
Okay. Is there any preference in terms of the terms of reference you give the search committee? Will it be internal candidates who will be preferred or any such term of reference?
I think we look at the entire universe, internal and external, and choose the right candidate for the bank.
Okay. Is there anything at all that Reserve Bank has communicated to you in the last few days? You did say that you are awaiting Raghavendra Bhatt's, appointment as the interim MD.
No, I am not told that Mr. Raghavendra Bhatt is being appointed as interim MD. Mr. Raghavendra Bhatt has joined today, the 2nd July, as the COO.
As COO.
We have recommended to the Reserve Bank of India person for the interim MD.
Yes.
We are awaiting Reserve Bank of India's approval. I think we will be able to get it from Reserve Bank by the 15th July.
Okay, so the COO is not the person being recommended as interim MD?
I can't say anything at that time who is the new interim MD.
Okay.
These are all, unless the regulator approves and I tell the stock exchange, I can't tell anybody else.
All right, fair enough. Any other intimation at all from the Reserve Bank? Or any other conversation you may have had?
No, see, conversations will happen with the regulator continuously. So we've had conversations.
Okay. Well, we were given to understand that under the previous MD, there was a process of digitalization and retailization. This is what we heard from people close to the bank. Are those processes likely to continue? Do you expect any disruptions?
Whatever changes have been initiated will continue. All the changes are for the better growth of the bank. I don't think there will be any disruption.
Okay, okay. And did you notice any withdrawal of deposits, any problem at all in the bank because of the resignations?
Here and there were some small withdrawals, but nothing significant as to affect the bank. The bank's liquidity position is very comfortable.
Okay.
And if you had observed our capital adequacy ratio is at 19.85, I think, which is one of the highest in the industry. So we have enough capital for growth for the 3-4 years, and we have sufficient liquidity. I don't think neither liquidity or capital or growth is going to be affected.
Okay. Well, if you can dwell a little on the past, we heard about some auditor reports on 1.5 crore of expenses which were not authorized or above the authorization for the MD and the ED. But the resignation letter said personal reasons. Is there anything you can add in terms of the reasons for their sudden quitting?
I think these are two different events. Okay. Yes, there were some differences which have been resolved amicably. That's what we have said in the press release also. These resignations, they have said, is due to personal reasons. The MD wants to move back to Mumbai.
Okay.
And in case of ED, there has been some move by RBI to stay more often in Mangalore, which he says finds it difficult because of his personal circumstances.
Fair enough. So, the separate issue which investors in the share market have is that in many old private sector banks, when a new person with new ideas of maybe digitalization or computerization are introduced, there is a dissonance. Have you noticed any such dissonance? And is this something that the bank will have to tide over?
The digitalization process, I think, started somewhere in 2018, much before I joined.
Okay.
BCG were our consultant. So this is not something new. Okay. He was taking forward those initiatives and some more new initiatives. So I think there is no dissonance in the bank. Without digitalization, I don't think the bank can survive or any bank can survive nowadays.
Okay.
We are like any other bank, depending on more and more on technology and digitalization for improving customer service, for retaining customers, and for growth.
Okay. So there is no dissonance between the management and the rank and file of the bank. That's what investors would worry. That's why I'm asking.
I don't think investors have anything to worry.
Okay.
All initiatives will be continued.
Okay. Any other message for investors? That's largely the viewership that is listening to you.
The investors need not worry. All the initiatives will continue, and the plans for growth, digitalization, increasing number of products, all this will continue. And I am sure the profitability will substantially improve in the coming months.
Okay.
Months and years.
All right, well, time to slip into a short break. On the other side, we have Pawan Goel of Naukri.com who's waiting for us, and Abhishek Kumar of JM Financial Institutional Securities who's waiting by to tell us about the latest in terms of hiring trends. Don't go anywhere.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by Century Ply Club Prime, Raho Befikar. And National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar.
Aim to transcend growth effortlessly. Wonder which market cap to invest in. These funds aim to blend asset classes for growth. Motilal Oswal Large and Mid Cap Fund. Motilal Oswal Multi-Cap Fund. Motilal Oswal Flexi Cap Fund. Think equity, think Motilal Oswal. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Sir, try berry pulao. Too good. Good, no? Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analyzing. Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ.
Welcome back. You're with us on Bazaar Morning Call, and we're looking at trends from the IT space now. Of course, what companies are saying, what's happening with respect to the business and overall hiring trends. So let's actually talk about this, because hiring activity seems to have picked up pace. This is as per the Naukri JobSpeak Index. This index saw an 11% jump in June. IT hiring has seen a turnaround after months of muted activity. To talk about this and how companies are positioned, we have with us Pawan Goel, Executive Director and Chief Business Officer at Naukri.com. And we also have Abhishek Kumar, IT Services Research Analyst at JM Financial. Gentlemen, thanks so much for joining in. Let's start with the good news first, Pawan. So it's great to hear that the JobSpeak Index is now pointing towards an 11% improvement. This at a time when, global headlines are still weak, whether it's Google or yesterday it was Microsoft. I mean, the layoff announcements are real. So you tell us, how should we interpret this 11% increase in the JobSpeak Index? What level of jobs are we talking about? Is it large IT services companies, mid-sized? Tell us more.
Yeah, so I think we should, while there is a month-to-month JobSpeak variation, if you take a quarter view, the quarter view is more subdued. The April was at 9%, May was flattish, June was 11%. So for the quarter, it turns out to be about 6%. So it's a reasonably, not a doom and gloom, but not a very, I should say, ebullient scenario as well. Now, when
6% over Q1, you'd say, right? That's the average increase.
Yes, 6% in the full quarter.
And this we're talking about routine, IT services jobs.
No.
Some more color on this. What kind of companies?
I'll give more color. Yeah. So this is for overall white collar hiring. Now,
okay.
Double click on IT. April was give or take 1 or 2%. May was negative, and June is slightly positive, which is 5%. Now, so that's a turnaround from a flattish or negative to +5. But it is still only 5%. And if you average for the quarter, it is still remains flattish. Now, in IT, it includes several other sub-classification. You have services, you have software companies, technology companies, and all of that. So if you go by another next level double click, IT services is still negative. I don't have the specific number there, but in IT software and technology, they are more positive.
So what's the quarterly average for IT services? Like you said, 6% is average for white-collar jobs overall.
For
IT services?
IT overall is flat.
IT overall is flat. Got it.
And how would the, Pawan, but is there any trend? How would this number of 6% and even flat for the IT services compare with the prior 2 or 3 quarters?
So if you take the full 5-quarter view for IT, so starting from, let's say, Q1 of last year, there was one quarter, which is July, August, September of last year, Q2 fiscal, Q3 calendar, which saw robust 10% plus growth.
Okay.
All the other 4 quarters have been very similar. It's like either 1%, 0%, -1. It's varied in that range, except for that one quarter. So IT overall has remained muted. There are months where it seems like perhaps it will buck the trend, but other than that one quarter, it's not sustained.
So it's the same for the last 3 quarters at least?
Yes.
Correct? 3 or 4 quarters?
Absolutely.
And what about the open positions going into the next quarter? Do we have any numbers indicating a trend, or what would the number stand at?
So JobSpeak is a measure of that. It's both open, whatever people have searched for, and all of that. So it's an all-encompassing metric. So I don't, how things will change into July, it's hard to predict. But IT long-term view has been flattish.
Okay. Abhishek, you want to come in? Starting next week, we will be asking the companies about their hiring plans for FY26. Last year was a muted year in terms of at least fresher hiring. Now that increasingly we are seeing automation or AI, becoming more mainstream, even in coding, what are your thoughts on IT hiring going ahead?
Yeah, hi. Good morning. Thanks for having me here. I think as far as hiring is concerned, for large cap IT, especially, there are a lot of dynamics that is playing out, not just automation. First is just demand, right? Demand still subdued. The players still trying to improve their pyramid, trying to bring in more efficiency. So we see utilization levels for most of the IT players elevated, and they will probably stay elevated. They don't want to build capacity right now. They are probably just replacing attrition with freshers, and that's why that's how they are trying to improve their pyramid. But apart from that, they are not positioned for growth, because the visibility still remains low. So I expect on a net basis, hiring for IT services companies to remain subdued. Any hiring that they might do might be for specific skill set or for improving their pyramid by just replacing attrition.
Okay, Abhishek, that doesn't sound too great. I mean, from overall economy perspective either, you're expecting IT hiring to remain muted. Abhishek, maybe it's a little hard to answer this, but what's your sense? How much of this absolute flattish trend on IT hiring, how much of it is just because projects are getting delayed, there's global uncertainty, etc.? I mean, the business deals, and most companies have been telling us that, right? Even business conversations, deal ramp-ups, everything's getting pushed back. How much of this is pure business related? And how much could it be because of the changing nature of jobs? Maybe more AI, more automation. What's your sense?
Yeah, I mean, difficult question to answer. It's a combination of both, but I would say that it is more because of the delays in ramp-ups, deals not getting closed. There are margin pressures, so nobody wants to build capacity. So it's a lot more to do with the demand environment than because of AI. AI obviously has a role to play, but I don't think that is very prominent right now.
All right. Hi, gentlemen. Good morning. Good to see you all in. Well, Abhishek, I wanted to ask you a question with regard to earnings. Will a revision in Infosys's guidance to the lower end of the range that they've already guided for, will it excite the street? What are you penciling in?
Yeah, so our expectation is that they will raise the lower end of the guidance. At the beginning of the year, they said that their lower end of the guidance bakes in deterioration in the demand environment. That has not panned out. So we expect them to raise the lower end of the guidance, and then obviously a couple of acquisitions got concluded. So overall, we expect them to raise the guidance from 0 to 3%. To 1.5 to 3.5%. That includes 50 basis point of inorganic contribution.
Okay, but will it be a positive trigger, Pawan? Or do you think it's in the price and it's only the lower end which gets upgraded?
So,
sorry, I meant the question is for Abhishek. Apologies.
Yeah, I think that should be taken as positive because, we saw it last year also. Infosys through the year raised its guidance. So that should be taken as positive by the street.
You've also downgraded Tech Mahindra to a hold. Can you take us through the rationale behind that?
Yeah, so Tech Mahindra, since 31st of April, has been the best performing large cap IT services stock, up 18%, significantly outperforming both its larger peers and Nifty IT. And now, its multiples forward, PE multiples are at a slight premium to Infosys. So we think that kind of caps the upside, and we are expecting a soft quarter for Tech Mahindra. So I think the stock can consolidate, and investors should wait for a better entry point to play the turnaround story. We still remain constructive on the on the turnaround path that they are on. But I think at this valuation, there could be some consolidation in the stock.
Okay, all right. Got that. Abhishek, we want to actually, talk to you more about a lot of your picks, etc. Maybe we'll have a longer discussion. But right now, to wrap this up and go back to the hiring point, Pawan, while you're telling us about muted trends across IT, what is the indication? What are you hearing from companies? Why is demand low? And what are you anticipating on this whole AI piece, AI automation? Also, I don't know if there's any indication of salaries. Wherever there is hiring, because the market is so muted, is there wage deflation, so to speak, as well? Or could that be possible in the coming months?
So from a demand standpoint, it's all that we are hearing is uncertainty. Now, there are several geopolitical events which have contributed to it. And so the uncertainty in terms of where the business is what we are hearing. Now, in terms of AI, we see a significant demand for AI jobs. It's up in the 40% kind of a range, and it is sustained in that range for a long period. So AI demand is very, very robust. That's also leading to premiumization of talent. If you look at talent which is paid highly with respect relative to their experience, across experience segment, we see demand for that talent. Okay, so it's a demand for, let's say, this 20 lakh plus segment is in north of 20%. So by salary, it's the premium talent, more experienced talent that is in demand. Less premium talent, that's where we see demand being much softer. In IT, there's another trend we also see. The demand is higher in tier 2, tier 3 cities. So perhaps that's an indication of talent availability at the right price point. So that's also what we are seeing. Now, with respect to AI and its overall impact, it continues to remain a question on everybody's mind. But one indicator that I look at is growth in ITES and BPO segment. And for the quarter, that segment has grown by 9%. Okay, and June is an aberration, and it's much higher at 19. But for the quarter, nevertheless, still is 9%. So that is where one would expect an impact. But while it may happen in future, it is yet to materialize in our numbers.
Gentlemen, thank you very much for joining in. Last month, I'd read some article which said that in the US, like graduates, so in the age of 22 to 27, so the degree holders, they're not getting jobs, and the unemployment faced by that category is the worst in a decade, barring the COVID period. And so, so many of the computer science graduates who perhaps 2 years back would have, 3 years back, would have had 10 job offers, this time are struggling. And that's, what's happening on the AI front.
And that's also telling us that I think the IT landscape is now starting what could be a tectonic change phase from, low-level, entry-level jobs and mass hiring. What we were just hearing Pawan say, that the demand now is for experienced talent, for high-quality talent, people who've upskilled themselves. So the Indian IT landscape seems to be definitely going through a major, major change. Gentlemen, thank you very much for that. Great conversation. Thank you for all the perspective. But with that, we have to shift the focus back to the market. Let's look at the Nifty again. Nifty is doing very well, actually, 88, 89 points higher. So the morning has turned out to be fairly robust. The midcap index and the bank Nifty, those indices are also up a little over a 0.25%. So there was that early dip. It's gotten bought, and the mood seems to be up for now. Good time to bring in Mitesh to get some more ideas. Mitesh, welcome back. So tell us, how do you size up the market now? What are the trades, index and stocks?
So the market, today we talked about that 25,400 has acted as support, and therefore, good chance that we will see a bounce back. I think we already started that process. We will head towards maybe 25,650, 700 zones, which is where some kind of, a supply could emerge, and that's the short-term target. I'm still not sure whether we'll immediately clear 25,750. So for the timing, we'll keep 25,700 as the target area and suggest traders to take some profits over there. And then see, if it shows further strength, then we'll maybe add at higher levels.
Okay, all right. What about individual stocks, Mitesh?
I have one buy and one sell, Nigel. On the buying side is Axis Bank. I think, it's been doing a range of about 1165 to about 1250 on the upside, and it's bouncing back from the lows of that lower end of the range. So today, I think we got a low of around 1169. So buy here with a stop below 1160. Look for targets to begin with in the range of 1220, and then eventually 1240, 45 on the upside. On the selling side is Bajaj Finserv. I think, that's a stock which, after having a good rally, is now showing mild signs of profit booking. So sell here with a stop just above levels of 2006 and look for targets of 1940.
Okay, all right. Thanks a lot, Mitesh, for that. And the stock we discussed in the morning, CPCL, which is Chennai Petro. We had highlighted that yesterday delivery was very, very large in comparison to averages. The first hour volumes, in fact, are very, very large in comparison to what we have seen. Massive volumes. And the stock, in fact, has perked up a little bit as well. The 20-day MA comes in at around 660 rupees or thereabouts. Well, time to slip into a short break. On the other side, Manisha Gupta is waiting for us. She'll turn the attention to the commodity space.
एक 12 नंबर पड़ा क्या उधर? कहाँ खोया रहता है भाई? हमेशा मोबाइल में घुसा रहता है। आपके महबूबा देख रहा हूँ। ये सब क्या है भैया? हाँ? क्या बाइक थी यार? रिंच एकदम, हाँ? क्यों नहीं होगी भाई? बाइकर बनने का सपना जो था, फिर ये डुगडुगी गई कहाँ? पापा के साथ साथ सारे सपने भी चले गए। अब तो बस अपने गैराज में बैठा लोगों की डुगडुगी ठीक करता रहता हूँ। पर अपने बच्चों के सपनों के साथ ऐसा कुछ नहीं होने देगा। वो कैसे? पहले से लाइफ इंश्योरेंस का टर्म प्लान ले रखा है, ताकि मेरे मोंटू के सपनों पे कोई ब्रेक न लगा सके। बड़े भैया,
सपनों को रखो सुरक्षित टर्म प्लान के साथ। सबसे पहले लाइफ इंश्योरेंस।
वेलकम दादा।
वाह!
अरे भाई, ब्रेकफास्ट मिलेगा?
हाँ जी।
हीटर?
हाँ जी।
तो अब क्या सूरज लाओगे?
जहाँ सूरज वहाँ रोशनी, और जहाँ विक्रम सोलर वहाँ खुशियों वाली सनशाइन।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियाँ आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशित आई ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो, और फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना? ये सब एक ही नाम की बात कर रहे हैं, और वो नाम है BNB, आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए पीएनबी लेकर आया है एमएसएमई लोन स्कीम्स जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है पीएनबी, वो भी बिना किसी झंझट। झट से पीएनबी का भरोसा, अब हर व्यापार होगा बड़ा।
Welcome back. Equity markets having a good morning. Let's move on to the world of commodities then. And we have Manisha Gupta in the house for all the latest action. Manisha, so what's on your radar today?
Well, I'm looking at metals because yesterday was a good day, and today as well, we're looking at the Asian markets trading on the positive side here. So if you look at the overnight gains and movements, you will see that it's more than 2% of gains that we've seen in iron ore, in steel rebar, and even better gains, as you can see, in platinum, palladium, between 4 to 5%. It's been a good overnight session, and the Asian markets actually seem to be doing a bit of a buying at those current levels. But I also want to talk about copper because we're trading at a new 3-month highs. $5.1 is how it's trading in the COMEX markets there. And of course, there's a bit of a disparity because when you look at LME, the first half of this year has seen gains of 12%. But it is the US markets which are trading at a premium because of these concerns about or whether or not there are potential tariffs coming in. And is the reason you've seen the prices gain up by 26%. The dollar index trading at a 3.5-year lows has been supportive. The Chinese manufacturing data has come in on the positive side, better than what the street was anticipating. And there are more trade deals happening now. One between US and Vietnam as well does do well for the sentiment there. And it's the Goldman Sachs says that the Chinese 2025 copper demand is expected to rise by 6%, also supportive. So the markets are anticipating that going forward, while the supply could be a concern and so could be tariffs, but it is going to be a stronger demand period. Also, when you look at the US copper at spot premium, that one is trading at a $1,200 a ton. So there is more demand right now than later. You have copper prices trading in a backwardation, and that tells you that there is supply tightness, also supportive. Roadblocks also by informal miners in Peru. That report came in overnight, has disrupted transportation. And then the street also is looking at disruption at Panama mine, Congo as well. So just not that it's tight supplies, but there are supply disruptions coming in as well, which are supportive for copper going forward. A quick word on aluminum, and because of the Trump tariffs at around 50%, the US consumers are paying $1,250 a ton above the LME prices right now, keeping the prices also supportive. Same case for zinc as well, with the kind of steel demand and steel positivity that we are seeing. The zinc prices, the galvanized metal, also has seen some support. Having said that, the International Lead and Zinc Study Group says that the world zinc mine is expected to see higher supplies in this year, could keep the prices in check. But it's all going to be about the US jobs data today. Further cues to come in from that.
Thank you very much for that. Let's talk about some of the big movers in the morning. On the way down, it's Avenue Supermarts. Manglam joins in. Manglam?
Well, brokerages aren't very happy with the 16% growth that the company's reported in the revenue. If you look at, the notes that have come in this morning, Morgan Stanley has an underweight rating on the stock target of 3260. They say that, they were expecting a number of 17.4%. So to that extent, it's been slightly below their expectations. The implied same-store sales growth is close to around 3 to 4%. Macquarie too has an underperformed rating and a target of 3,000 rupees on the stock. They say that sales growth moderated slightly from the fourth quarter, and there was a marginal miss, and healthy pace of store additions is what keeps them slightly upbeat on the stock. Goldman Sachs, on the other hand, they have a sell rating. They too have a target price of 3,400. They said the sales growth was weak, but they also expect margin contraction by the company in the first quarter when the company actually goes ahead and reports their results. They believe that the company will continue to face competitive pressure from large, quick commerce players in the urban market. So that keeps them slightly cautious on the stock.
Okay, all right. Got it. Explains why there's no enthusiasm really there on Avenue Supermarts there after the Q1 update. Thanks for that, Manglam. Let's move on to Tata Power. Tata Power is dealing with a bit of a legal blow, arbitration that's not gone in the company's favor in Singapore. Vivek is here with more details. Vivek, fill us in.
Well, that's right. Like we highlighted earlier today, what's actually happened is that Singapore Court Tribunal has actually ruled against the company in a dispute with its Russian mining partner. Now, the company has been asked to pay a significant amount, almost $490 million in damages to its Russian mining partner, which is Kleros Capital Partners. The payment has to be made along with interest as well as other legal costs too need to be covered. Now, the company says that they are in process of reviewing the contents of the award and they are evaluating all options, including the right to challenge this particular award that has gone against them. Now, what is this particular case pertaining to? Kleros earlier claimed that Tata Power breached confidentiality as well as non-circumvention clauses in the NDAs that both the company has earlier entered into. This is for a coal mining project in Russia. Given the fact that there's a significant number, almost over 4,000 crore rupees, is the damages that Tata Power will have to bear, there has been a negative reaction on the stock.
Thank you very much for that. Get into a break. On the other side, we'll have Ajay Sahai of Federation of Indian Export Organization and international trade expert Abhijit Das joining in to talk about the US tariff deal with India and with Vietnam and the likely impact on Indian exports.
ओहो सुन देखो इधर ये छतरी भी है
सुनो ये हमारे लिए कुछ ज्यादा महंगा नहीं है अभी से बिगाड़ना शुरू
हम बिगाड़ेंगे तुम बनो
क्या
खरूस
अच्छा एक मिनट
क्या हुआ
अभी से इतना खर्चा करोगे तो मेरी पढ़ाई का क्या करोगे
आप बिल्कुल टेंशन मत लो आपके पापा ने प्लानिंग कर रखी है
अच्छा
उन्होंने पहले ही लाइफ इंश्योरेंस का चाइल्ड प्लान सोच रखा है इसके लिए
बढ़िया है
आप आइए बैठिए लेके चलते हैं इसमें
सपनों को रखो सुरक्षित चाइल्ड प्लान के साथ सबसे पहले लाइफ इंश्योरेंस
Crizac Limited launches an initial public offer of equity shares of face value of 2 rupees each in the price band of 233 rupees to 245 rupees per equity share. Bid offer opens on Wednesday, July 2, 2025. Closes on Friday, July 4, 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
केंट आरओ देता है सबसे प्योर पानी और केंट आरओ प्योरिटी दिखाता भी है खुद ही देख लीजिए केंट का सबसे शुद्ध पानी पियो और हेल्दी रहो।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है ड्रीम सिटी। तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज़ हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की ज़रूरत नहीं है तब लगा कि लाइफ में ग्रो किया। कशिता ही ऐसे बॉय मिलते मुंबई में चांस ही नहीं।
SIP करो इन्वेस्ट करो लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ। डूबेगा नहीं जलेगा भी नहीं कोई खा नहीं जाएगा धोखा नहीं देगा ऊपर नीचे भी नहीं होगा सेफ रहेगा सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाइ क्लब प्राइम रहो बेफिक्र।
आप कौन? आपके स्टॉक एक्सपर्ट्स आपको बताएंगे स्टॉक को कैसे बताएंगे।
सर इस पे लिखा है डूबते को तिनके का सहारा।
अब ये एक्सपर्ट्स आपको कितनी बेफिक्री से ट्रेडिंग करा पाएंगे ये तो पता नहीं पर यू ट्रेड एल्गोस की ओरिजिनल बैक टेस्टेड स्ट्रेटजीज के साथ ट्रेडिंग बने एफिशिएंट और आसान। डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Welcome back. We're getting back to the big global story, and that is trade deals that the US is signing and perhaps all set to sign. Now, we know that one has been announced between the US and Vietnam overnight. Of course, we are keenly awaiting developments on the India-US trade agreement. Donald Trump yesterday announced that Vietnam trade deal. Maybe it gives us some clues into what the alignment with India could look like. Though, of course, it's very specific bilateral agreements that the US is going in for. Indian exporters perhaps could be looking at higher tariffs. We still have sticky issues around areas like dairy and agriculture. Let's talk about this and the implications for Indian exporters. We have Ajay Sahai, FIO Director General and CEO at the Federation of Indian Export Organization. We also have with us Abhijit Das, international trade expert and former head of the Center for WTO Studies. Gentlemen, thank you very much for joining in. Abhijit, if I could open the floor with you first. And let's start with what we can infer or take away from the way the US-Vietnam trade deal got done. I mean, they started with 90% tariffs, they've ended at 20%, and they've tried to plug the leakage areas, which is this, the tariff to plug any kind of transshipment, which is happening via Vietnam as well. Let's look at the implications for India here. Now that Vietnam doesn't seem to be getting a very raw deal, would you say it's bad news for, say, Indian textile exporters?
First and foremost, it's not entirely correct to say that Vietnam is not getting a raw deal. Let's bear in mind that before the Trump reciprocal tariffs were announced, Vietnam was benefiting from a significant access into the US market at preferential tariffs. So even if the deal which was announced last night, even if it's implemented, it would still be a setback for Vietnam. So let's bear that in mind. Coming to the aspect of what can our exporters expect, the key point over here is that when the reciprocal tariffs were announced in February earlier this year, there was some optimism that Indian exporters would face 26%, Vietnam would face 46%. And there was some optimism that our exporters might increase their share in the US market. Now, that was subject to many caveats and constraints. And I, for one, never really believed that really because of higher tariffs on Vietnam, we would have a huge export opportunity opening up in US. Now, what the recent announcement of the deal between US and Vietnam has done is it has certainly dampened that optimism. Having said that, this should not be a trigger for making sure that India and US come to an agreement immediately before 13th July. To my mind, the real determining factor will be agriculture, and we will have to see how positions on agriculture are accommodated. And that, to my mind, will determine whether we have a deal or not. And if we do end up having a deal, maybe our exporters, even in textiles and clothing sector, might be able to enjoy some benefits compared to Vietnam.
Ajay, any lessons India can draw from the US-Vietnam deal? And secondly, as my colleague Surbhi was also asking, particularly on exports, where India directly competes with Vietnam, what could be the impact on India as things stand right now?
In fact, I consider it a very positive development. The very fact that US has carved out a deal with Vietnam after doing one with UK shows their willingness to engage with other countries. And since India is proactively engaged with the US, we can look forward for a deal. Secondly, we are now very clear that Vietnam will have market access in the US at a minimum tariff of 20%. If we work out a BTA where we get zero tariff, we will have 20% advantage. Even if the reference tariff of 10% remains, we will have 10% advantage. So this will be very, very positive for India. Now, if we look into the products, in fact, India's export to US in the calendar year 2024 was around 80 billion. Vietnam was in 110 billion, and we are competing in many of the sectors, including electrical and electronics, machinery, apparel, in particular, furniture, footwear, saddlery goods, rubber goods, plastic goods, automobile and auto component. And therefore, in these segments, if we enjoy a tariff advantage of 10%, which happens if we work out a BTA, and even if the 10% tariffs remain, it will be a huge gain to India. So definitely we can look forward for that gain. I'm pretty sure that a lot of US companies who are looking into India for export, a lot of them are relocating from Vietnam and China also. They will definitely move towards India. Let us bear in mind that one of the reciprocal tariff fallout has been that global companies are looking into setting manufacturing base in a lot of countries. They are already in China and Vietnam, and therefore they look forward for investment in India in a big way.
No, but we have to see, Mr. Sai, I take your point completely, but those are the things that we'll have to see. This separate transshipment tariff, whether something like this gets worked into the contours with India as well, because we know, Mr. Trump has been very vocal. For instance, he's called out the Apple CEO saying that you are making your phones in China. Now I hear you want to make them in India and then bring them to the US. Doesn't fly. And then separately, we've seen the reports just over the last 24 hours, right? Foxconn sending a lot of its engineers back, etc. So we need to see how this...
He has not clarified on transshipment. The general impression of transshipment is that if the goods of third country get routed through a country which is having preferential tariff, you try to circumvent those provisions. So in fact, this also infers that US is not looking into duty beyond 40% on China and ASEAN, because if China and ASEAN goods are allowed transshipment to Vietnam, not subject to 40%.
40%, which should be the duties in line for China that they're speaking of. I take your point. Just a clarification, Mr. Sai, like you mentioned, that, even if the duty on a lot of items that we're exporting to the US comes at 10%, and you named a lot of items, textiles, electronics, maybe even furniture goods, etc., there will be a differential. What would be the average blended tariff on some of these items now for us, for our exporters, as they were being exported before Liberation Day? Just to understand what the increase will be, assuming we remain at 10%.
On the most of the items, the tariff in the US was in the range of 2 to 5%. Thereafter, now we have moved to 10% reference tariff. I'm not sure when we are negotiating the BTA whether MFN will come to zero. Reference tariff or 10% will remain, because US has collected over $300 billion of duty in a single month, and probably in that way they may not provide exemption to reference tariff. Even they have not provided to UK. So I'm basing my assumption that if MFN becomes zero, reference tariff remains at 10%. Vietnam will be having 20% duty, we will having 10% duty. If reference goes, Vietnam will be at 20% duty, we may get zero duty.
That would be sunny skies.
All right. Mr. Das, wanted to get your thoughts in on this rules of origin restriction, the punitive tariff of 40% on tranship good. If that is a part, is a part of the India-US deal, how will it impact India and Indian exporters?
There are two ways of looking at this 40% punitive tariffs on transshipment. One, of course, is it will prevent countries from circumventing the tariffs which they might themselves face. And over here, China is an obvious target. Other ASEAN countries could be equally on the radar screen. But there's the other way of looking at it. While we are awaiting the fine print, the legal details of how this 40% tariffs will be calculated, what will be the rules of origin, if it's purely based on transshipment, I don't think we have anything to fear. However, if the rules for the transshipment suggest that if you're importing parts and components or inputs from China, and if that is treated as transshipment, then I'm afraid our exports in the sectors of electronics and pharmaceuticals, they may be at the crosshairs of this 40% tariff.
Yeah, that's a great fine point that you've raised, Abhijit, that we need to see that even if the components or the APIs for pharmaceuticals, if they start getting counted as transshipment, then we could be in for a lot of complexity. Very quickly, last 30 seconds, Abhijit, on this. End by telling us about the core sticky point. We know that agriculture and dairy is where things have been stuck. The Americans want to come in. They say we need complete market access, remove non-tariff barriers, allow us to come into your market and compete. What is the workaround, or what would you expect? What kind of a different deal would you expect, which the US president has spoken about?
What we might think of in terms of a landing zone is, while we will not allow GM products to come in, there could be some concession to the US in terms of more predictability in terms of time frames within which we will take a decision on whether to allow GM products to come in or not. On key sticking agriculture products, maybe a possibility would be something called a tariff rate quota, whereby we allow imports of some agriculture products at lower tariffs up to a predefined quantity ceilings. So this could be one option, and maybe this might be perhaps the only viable practical option which protects our domestic interest as well as gives some market access to the US in the agriculture sector.
All right. That's a great perspective to have as we look at the final contours and maybe an eventual announcement of the India-US trade agreement. Thank you very much, gentlemen, for joining in and giving us your views. And with that, it's curtains on this edition of Bazaar. Thanks for watching. Chartbusters coming up next.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, 7 दशक देश के साथ।
एक 12 नंबर पड़ा क्या उधर? कहाँ खोया रहता है भाई? हमेशा मोबाइल में घुसा रहता है। आपकी महबूबा देख रहा हूँ। ये सब क्या है भैया? हाँ? क्या बाइक थी यार? रिंच एकदम, हाँ? क्यों नहीं होगी भाई? बाइकर बनने का सपना जो था, फिर ये डुगडुगी गई कहाँ? पापा के साथ साथ सारे सपने भी चले गए। अब तो बस अपने गैराज में बैठा लोगों की डुगडुगी ठीक करता रहता हूँ। और अपने बच्चों के सपनों के साथ ऐसा कुछ नहीं होने देगा। वो कैसे? पहले से लाइफ इंश्योरेंस का टर्म प्लान ले रखा है, ताकि मेरे मोन्टू के सपनों पे कोई ब्रेक ना लगा सके।
सपनों को रखो सुरक्षित टर्म प्लान के साथ। सबसे पहले लाइफ इंश्योरेंस।
Aim to transcend growth effortlessly. Wonder which market cap to invest in. These funds aim to blend asset classes for growth. Motilal Oswal Large and Mid Cap Fund. Motilal Oswal Multi Cap Fund. Motilal Oswal Flexi Cap Fund. Think equity, think Motilal Oswal. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Boss, I just saw Raghav walking towards the parking lot.
Movie date.
He's not going anywhere. My car is parked right behind his.